This is Chris, Suarez Home and Finance. Monday mornings, coffee with Chris. Good morning. Hope you're having a great day so far. It's just beginning. So, your week has got to be awesome this week because that's who we are. So, grab your cup of coffee. We're learning a little bit more today, and hopefully, you will get some nuggets from this in this crazy market that we have. So, I've got Karen. She is one of my counterparts as far as my side of things. So she's not somebody that you as a real estate agent or you as a buyer or homeowner would call. It's somebody that I work with in the background that helps me get your deals done and you into a home or refinanced or investing or whatever the case is. So let's add her to the call, get in this, and get a little bit more educated for the week. So here is Karen with me. So, hey, Karen, how are you?
I'm great. Good morning, everybody. How are you?
I am wonderful. So, hopefully that this week is great, successful, awesome, all of the good stuff, and that we're smarter every day. So, we're going to be talking about how Karen helps me with my people. My people, as in my clients, my real estate agents, all of that kind of stuff with you guys out there watching and listening. So, Karen is what I call outside of the box. So you have your normal loans as far as conventional VA, FHA, USDA. So that's what we call conforming. We've gone through those in the past on other podcasts, everything else, whatever. So that's the conforming arena. Then we have what's called non-conforming, which is what I call outside of the box. It's outside of that normal everyday that your normal banks do, that everybody normally does. But I do it better. Just kidding. But I do. But so we are outside of the box. So what that means is whether you are buying an investment property and it's a different loan type, whether you are self-employed and you don't claim a lot of income on your taxes because you are self-employed. That's the beauty of it, that you have your deductions, you have all of that kind of stuff. You may have been outside of a bankruptcy or a foreclosure more recently that you cannot do a conforming loan with. So there's all different, arenas. There's all different types or whatever, again, outside the box. So Karen, so we've just explained as far as what conforming means, conventional, all that kind of stuff. So you've got a couple of things that I've done in the past. You've got something different that I've not done in the past. So let's start out with the first one. So right now in this market, we're kind of saying marry the house, date the rate. In other words, the housing market is, it's still going. So yes, the prices have changed, things have adjusted and everything else. We all know that. It is a roller coaster, just like our personal lives are. It is what it is. We roll with it. And so what I've been telling my clients is marry the house, date the rate. In other words, get into the home. Yes, the rates are higher, but as soon as the rates are coming back down, which again, it's a roller coaster, then we're refinancing you out of that higher rate and getting into a lower rate. So that's where date the rate comes in. So Karen has let's start out with your first time home buyer program, which pay attention because this is not the normal first time home buyer program. So tell us a little bit about that.
Yeah, so Acra Lending, whom I am employed by, we specialize in non-traditional mortgages, the out-of-the-box mortgages that Chris referred to. And our first-time homebuyer investment product is for that person that may live with a significant other that wants to acquire an investment property. They have zero experience owning a home at all. And we allow them to purchase that home underneath our program without employment, without income, and without reserves. It's an excellent program. The program is totally driven by the potential cash flow for the property that is being acquired, meaning that the appraisal is going to tell us what rent is available in that neighborhood. And if it's enough to cover your payment, you're good to go.
Okay, so is that different than a DSCR?
That is exactly a DSCR loan.
Okay.
Many different banks offer different types of DSCR loans. My bank in particular offers one for the first time home buyer.
Okay. So the DSCR, tell me what the initials stand for.
Debt service coverage ratio, but
Okay.
we'll call it cash flow to keep it simple.
Yeah. So that's where I can tell you DSCR. What it stands for, who the heck knows? But anyways, so bottom line is that it is for an investment property, and you don't have to have the income, so to speak, from W-2 or self-employed to counter that payment, to be able to afford that payment with all the rest of your debt. It is a true investment loan, investment property loan that you still have and correct me if I'm wrong, because this is in most cases, you still have the appraisal to tell us the value, to make sure that you're buying the home for what it's worth or for what you're under contract with. So we still have to do that, but we are doing also a rent schedule. So the appraiser is doing an additional report saying this is how much that the value, or how much rent can be received, charged, whatever, and that amount of rent counters the mortgage payment. So you require the appraisal and rent schedule as well, correct? Or the appraisal, yes, definitely the rent schedule, but the appraisal as well.
Correct. And that rent schedule is so critical, because we're looking for the rent to cover the payment on the property.
Right. Okay. So let's give an example for those of you that may be the first time home buyer that you want to, check into doing this. So let's say, for instance, you buy a house and the mortgage payment, including taxes and insurance, because you have to include that in the total number. So let's say that payment is $2,000. The rent schedule comes in at $2,500 for rent that you could charge for rent. So in that scenario, you've got a $500 slush, you're fine. And so, Karen, again, correct me if I'm wrong. So if the rent schedule is $2,500, are you counting only 75% of that rent schedule, or are you counting the full rent amount?
So my particular lender, we take 100% of the rent schedule.
Okay. And the reason why I ask that is because if you are, with other loans and everything else, conventional, doing an investment, so on and so forth, if you've not had the experience of doing investment properties, then I have to take 75%. So again, this is where a DSCR loan is outside of the box. So in that scenario, if your mortgage payment total is $2,000 and you can get $2,500 based on the rent schedule, you're golden, you're good to go. And so with that, I don't need employment history.
Correct.
But I do need address history. I need credit. So you still have to qualify for credit. I do not look at the debt ratio, because we're not looking at anything else except for the property with the rent schedule, correct?
Correct.
Okay. And so I do need credit, assets, because you got to be able to afford to buy the house, but the down payment on and the closing cost. So as far as down payment is concerned, down payment is not just a cut and dry amount on a DSCR. It still goes by your credit score, and that's going to dictate, and also, which you and I have talked about before, again, correct me if I'm wrong, but your down payment is going to be based on your credit score, but also your trade lines. So do you have 3 trade lines for 12 months on your credit report, right?
For us, it's 24. So 3 trade lines with 24 months history.
Okay. So what that means to everybody out there in the world is that, for instance, a car loan. A car loan is a trade line. You have to have that account for 2 years, 24 months on your credit report. A credit card, a personal loan, installment loan, whatever. So you have to have those trade lines on the credit in order to, for different guidelines or whatever. But those trade lines dictate how much you're going to be able to, what your down payment is going to be along with your credit. So if somebody calls me and says, how much do I need to put down? That's the same as calling me and saying, what's my interest rate going to be? It's a loaded question. To me, the best way to say it is it's a loaded question. There's criteria, there's questions. We gotta ask the questions. I've got a client that has called and they are shopping for rates. And we've said a few times, I can't give you an exact rate. I can't fine tune that for you unless I have some information. If you'd like to take 5 minutes to answer some questions, I can give you a rate range, but I can't give you an exact rate until I have all the scenario, everything in front of me. And that goes same thing for these outside of the box loans. Are they going to be a higher interest rate than a regular conforming loan? Absolutely. You are riskier. You're doing an investment. Should you be able to rent out the property? Yes. Are you going to rent it out? Are you going to have somebody that leaves after 2 months and now you're paying the mortgage yourself for 2 months? Possibly, hopefully not. And so that is why the rates are higher, because it is a riskier loan. It's outside the box. Did I miss anything as far as that's concerned? Do you think we covered all of that part?
I think another component that's very critical is housing history, right? So that even though we allow first-time home buyers and even someone who may be living with a significant other, if you've got somebody who actually has verifiable housing history, meaning canceled checks for rent or a current mortgage, they're actually going to qualify for a higher percentage of the loan than somebody who doesn't have that. So
Okay.
for example, 80% versus 70%.
Okay. So housing history is key. But with that, it cannot be cash that I paid to my mama. It has to be something that we can source, whether you pay somebody online, whether you pay by a check. Now, one thing that I've had in the past is paying by money order. So is that something that you have, that you can accept as by money order, or do you need to see that in coming out of the bank account also?
We need to see it coming out of the bank account, and we need to see the receipt of the money order.
Okay. All right. So same thing as normal is, again, you just can't get some cash and pay somebody or whatever, which, a lot of landlords just give me green cash because they may not be reporting it or whatever. Whatever the case is, if it's cash, then we can't use it. If you live rent free, then we can't use it. So you've got to have that housing history there. You've got to be able to say that you know how to make your payments. It's basically you got to be able to pay.
The latest trend, I have a 33-year-old who lives in New York City, and the latest trend is everyone just Venmoing. They Venmo their rent. Everything is electronic. So again, you have to demonstrate that it's coming out of your account every month and provide the statements as backup for that. It's critical. It's crucial.
Right.
To actually verify that it's being paid on time. It has to match the lease. Your payment's due by the 5th. We need to see that money coming out on or before the 5th.
Right. Okay. So it's with today's times, I don't think a lot of people do cash anymore. I do have people that do. But just with what you said, Venmo, I've had, people do that before. I actually had a client that we closed a couple months ago, that they did Venmo and Cash App. So that was like, oh my God, because you've got to get all the statements from both apps, from the bank account, all of the above. And so it's a lot. So, the better your records are, then the easier it'll be as well. So keep good records, do it all from one account, and then you're good. You should be good. So, okay, so that's a DSCR. So that's also where you had just said as far as a first-time home buyer. So that's in that realm as well, because again, they don't have to have the history of being a landlord, of being, having investment rentals and so on and so forth.
And they don't even have to be paying housing. They're just going to have more skin in the game, meaning more cash to put down.
Right.
In lieu of having the verifiable housing payment history.
Right. Right. Okay. All right. Let me see. There was, okay. So, look at, okay. So this is something that comes up for me. Let's talk about two things because I'm looking at my notes or whatever on my other screen. So if, for bank statement loans, so we can do bank statement loans, which I have done before. I've actually got a couple going right now. But for a bank statement loan, if you are self-employed and you have a business account and you are 100% owner, then we can or cannot use 100% of those deposits.
So if you're using a business bank statement, you're automatically going to get a 50% haircut on, a 50% haircut of your percentage of ownership. So if you were 50% owner, we could only use 25% credit for the deposits. However, if you're a 1099 employee versus somebody who actually owns the brick and mortar business, then more than likely you'd be giving me personal statements. And at that point, I would be able to give you 100%.
Okay. And I asked that because I know the answer, but somebody like me, well, it's my business. I'm 100% owner. Then why can't you use all my stuff or whatever? And so that argument is there all the time. Well, yes, but you still have expenses. You still have overhead. You still have payroll and everything else. So 100% of your deposits is not available income. What do you call it? Liquid, whatever you want to call it. So, and that's why, as far as a business, you don't have that. If it's going into your personal, then theoretically you've already paid all of your expenses and it's in your personal account. So that's why we can use the 100%.
Correct.
And so again, got a couple of those scenarios or whatever going on right now. I cannot even tell you, same thing as far as the DSR program, is that I cannot even tell you what down payment you're going to need or what you can afford until I have those 12 months bank statements. So this is, again, another, it's outside the box, but I have to have paperwork, documents in order to see what the numbers are, see what I have, because it's not a regular paycheck. I have to have those documents in order to send to Karen for the underwriters to see, okay, yes, we're going to use this. No, we can't use this. And so then I can go back to you and say, go back to the client and say, okay, this is how much income we have. This is what you're going to need for down payment. This is what you can afford to buy. And so it is not a cut and dry, give me a pre-approval, give me an answer today. It is not, so be prepared. And that's usually, like, as far as you're concerned, Karen, once I get you that, you're within, say, a couple of days to have a little bit of a slush there. Am I correct?
Yeah. So basically we're going to go over the statements. We're going to calculate the income. Now, if the CPA says the standard CPA letter that's required, Joe Schmo owns ABC Pizza and he's 100% owner, but his business expense does not exceed 25%. In that case, we could actually use 75% of the income rather than 50%. 50% is the industry standard in the non-QM space. However, the CPA tells us what the business expense is. We perhaps can allow that borrower to use a little bit more of that income.
Okay, so if I have a CPA letter, do I still need the 12 months bank statements?
Absolutely. So we need proof that the borrower is self-employed, and then we're using the bank statements in lieu of tax returns or pay stubs or both to calculate the income. And it allows the borrower who's self-employed in particular, whether they're a doctor or they're a nail salon owner, or they may be the 1099 person who does our nails at the nail salon, it allows all of them to qualify for a house or more house than they typically would be able to, because they're writing off too much on their income tax returns.
Right. Which we all want to do anyways, because who wants to pay taxes? That's just, it is what it is. Who the heck wants to pay IRS crap? I don't. When you're self-employed, IRS is in your life every day. So you don't want to pay more than what you have to. So, and that's not saying that I do, but yeah, you don't want to. Okay. So then, and that I just wanted to elaborate on that, because again, it's not a call me, give me an answer, for me to give you an answer, this second instantaneously. It's not. So be prepared. Don't go, don't call and say, I need a pre-approval now as this, because I got to put a contract in on a house now. It's not immediate like that. You have too much. And it's just because of how you do business. It is what it is.
So just to elaborate a little bit more on the program, we're using the last 2 years of revenues to prove the borrower's ability to repay their mortgage in the future. So this is regular reoccurring revenue. This is not, I bring in $8,000 to $10,000 a month in my business, and then I sold a boat and I sold a house. We can't use the sale of the boat or the sale of a house as income, even though you may have deposited that money into the account. So those type of items would be backed out. So I think it's very important to mention, because I see it all the time where people automatically assume that that was income, and that is not income.
Yeah.
That was from the sale of a one-time thing. It's not a reoccurring thing, and therefore we can't use it to prove your ability to repay your mortgage in the future.
Okay, good catch there. So yeah, so just because you put in a big old whopping check doesn't mean that we're going to use that. So and again, another reason why we need those documents in order to see what we can use. I have people call me all the time, whatever, and say, you know, that they're self-employed. Oh yeah, I make, you know, I make $500,000 a year. Okay, let me see your tax returns. Well, your tax returns show you only made 50,000 because you wrote everything off. So again, that's why, you know, these things are so important, that the documents have to be there before, and you can't just give a quick and easy answer. So talk about as far as a foreign national. So we can do foreign nationals. I've done before. And so a foreign national is, elaborate on the exacts of that.
So a foreign national, by definition, is someone who lives and works outside of the country. Okay, it's very important that they have a bank account open wherever they're living. And the reason why is because we're not verifying employment again. We're doing this off the DSCR/cash flow program that we spoke about earlier. We're doing this as an investment program. So we're not going to verify employment, and we're not going to verify their ratio, and we're not going to verify their income. What we are going to verify is their funds to close. So their assets from their bank in their country have to be sourced and seasoned for 60 days. And we're verifying that they live in their country. So if they don't have a bank account, that's going to look kind of fishy, you know, but it's a great program. A lot of foreigners come here. I get people from Colombia, Brazil, Venezuela, Mexico. And until recently, we were able to do Venezuelans, and now they're on what's called the OFAC list. So any country that's listed on this OFAC list online, you can Google it, we're not allowed to lend to. But anyone who is not on that list, it's fair game. They can come to the United States, find a house, put their 30% down, and use it for investment purposes. And it's a win-win for everyone.
Okay, so number one, you need to verify assets. Those need to be in English. They cannot be in the foreign language, so they need to be converted to English. Just saying, you know, we've had to do that before. If your bank doesn't do that, there's always a way to do it, but there's also third-party companies that you can pay to do that as well that are allowed. I've had some clients have to do that before. But okay, so foreign national, so they cannot live in the U.S. and be considered a foreign national.
Correct.
Because if they're in the U.S., they would normally have, and this is, we're not going to get into politics. So this is where they have they're either a resident alien or they have a visa. Then as far as conforming, we can do it if they're a resident alien or they have a work visa here, or naturally they're a citizen. So foreign national is none of the above, or none of those three. Foreign national is truly, you are not, you may be coming here to visit, but you are not allowed to be here as a resident, or not in, and I'm saying that because I'm saying the wrong words, but you're not a resident or in the process of being a resident.
Correct. Otherwise, you have to qualify, just not to interrupt you, but just as a regular U.S. citizen would. You would have to have the 3 trade lines with 24 months reviewed, the 12 to 24 months of housing, and you'd have to qualify just like everyone. You'd have to have the 2 years of employment history, the income. You'd have to be able to cover the debt to income. So there's a couple of more facets to this. One is called an ITIN borrower. An ITIN borrower is someone who comes to the United States. They open up a business typically. There's several different types of ITINs, but we'll just go with the typical scenario. And if their business continues to make money and thrive, they're going to continue to be approved. So instead of using a social security number, they're paying their taxes with an ITIN number. The ITIN borrower is allowed to live and work in the United States, different from the foreign national, and they do have to qualify just like a US citizen would. 3 trade lines, 24 months reviewed. Do you have housing? Is it verifiable? Yes or no? And then there's what you call a non-permanent resident alien. Again, they're going to have an employment authorization card. It cannot be expired. They're going to have a valid passport, whether it's from Mexico or Colombia, it doesn't matter, as long as their passport's unexpired, and they're going to have the proper paperwork. Again, 3 trade lines, 24 months reviewed, in housing. And then you've got the borrower who comes to this country and they may be hanging out for a little while and they don't fit any of these buckets. And everyone's frustrated because they want to buy something here, but they can't. So they either pay cash or they have to wait the 2 years if they're going to be working here and living here, or they go back to their country and we do them as a foreign national loan. The most often question I get asked is for students. You have a student who's coming here, they're living here, they're studying here. Can they buy an investment property as a foreign national? The answer is no, because they're living here. They cannot be living here.
Okay. All right. No, good to know, because, you know, you see it as well as I do. That comes up all the time. And so this is just, you know, elaborating on that. We're America, we're a melting pot. So there's all different kinds, you know, all different nationalities, people, everything else or whatever. And so everybody wants to be part of, I think anyways, of our country. So these are ways that you can be a part and still, you know, have a home here, whether, you know, you're investing and you come and stay every once in a while, but it's an investment home because, again, your primary residence is outside of our country. So that's, so is there anything else? I think that covered just about everything that I had. Is there anything else that, that you think to add or?
Sure.
Okay.
So as a non-traditional lender, sometimes Chris is not going to be able to get you into a conforming FHA, VA, your standard loan. And it could be because you may have credit issues like a bankruptcy, short sale, foreclosure, forbearance, mortgage lates 3 years ago. You may have collections, charge-offs. There are programs for you through non-conventional methods. And the way to get started is to talk to Chris. You got to do an application with Chris, give her all of the information so she knows what she's working with. That way that she can find an alternative, non-traditional lender for you. That way you do not have to go hard money.
Mm-hmm. Yeah, hard money right now. I was talking to one of my contacts last week or whatever. Hard money is going to be about the 12% rate, you know, give or take. There's different rate ranges. Because you're at risk. Hard money is also short term though too. So it's to get you into the house, marry the house, date the rate. It's, you know, depending on what your situation is. So normally there's avenues. There's not always avenues. You know, we try to check off the list and go down our pecking order to see what you qualify for, and maybe you need to be on a plan for, you know, like what Karen had said, maybe you need to be on a plan for, you know, another 6 months or so, like those students. But I think that we've covered quite a bit. And so we've given lots of food for thought for the week. So if there's any questions, make sure and reach out to me. My contact information, everything is, you know, this is again posted on all social media, all of my, you know, YouTube, my coffeewithchris.live channel or website, everything else. So if you need anything, remember, I have people like Karen that back me. That's how we get things done. So hope you have a great week. Thanks for joining us this morning. Thanks, Karen, for getting on here. I know we've gone back and forth to try and get you here. So you made it. You're here. Glad you were here. And we'll see you next week.
All right. Make it a great week, everybody.
Okay.
Thanks for having me.
Thanks, Karen.